back with another earnings that we were quite excited for here with Crowdstrike. Definitely an exciting one. Obviously, a stock that's been performing super well. I don't think you can ever deny the performance of this bad boy. Up 180% year to date. Are you kidding me? That's ridiculous. But the thing did fall nearly 7% after hours. In total, right around 8% total for the day. So not a good performance today. So we'll take a look at this earnings report and see exactly what the reasoning for that is. So looking at these numbers, you see a non-GAAP EPS of 3 cents, which is a beat by 4 cents. Good from a non-GAAP perspective, but from a GAAP perspective, negative 14 cents, misses by 2 cents. Nothing too major, all things considered, as far as that's concerned. From a profitability standpoint, they didn't post a positive number, and it's not a massive negative number for them. Not too crazy. But what I do want to point out, obviously, is from a revenue perspective, $199 million, up 84% year over year, which is a beat by $10 million. So, obviously, you just look at that revenue and you're curious to think about it, because full year, likely they could put up a number around a little bit less than $1 billion, and you still look at the stock's valuation up over $30 billion. I understand why the stock may have fallen if they didn't get perfect numbers. Makes sense. So analysts expect annual recurring revenue of $791 million versus a $723 million consensus. So quality stuff there. Looking at the finer details, and trust me, they're nice to me. You want to know why? They have an earnings slides, baby. So Crowdstrike raises the outlook for the full year to $809 million to $826 million versus the consensus of $772. So a big growth there. And that's versus a prior of 761 to 772.6. So it had already been moved up, and now it's been moved up again. Now it expects to deliver positive non-GAAP EPS of 2 to 8 cents versus a consensus of a 4-cent loss, which is nice again too. You love to see that. They've moved that. They moved that up as well. So. So subscription revenue was 89% up year over year, as we saw. Subscription gross margin was 78% compared to 76%. Annualized recurring revenue, obviously a good important number there, hit a record $791 million. Set a new record. You love that. The company added 969 net new customers this quarter as well. And for quarter 3, they're guiding 210 to 215 million, and a loss per share of 1 cent to even versus a consensus of a 5-cent loss. So pretty nice stuff. We'll look at these earnings slides as we would love to do. So obviously we skip a little bit of this, as we love to do. We saw these numbers at a glance. Obviously, subscription customers now total at 7,230, that's 7,230. So again, that's after adding a 900 number this quarter. Pretty nice, and approximately 57% subscription customers with 4+ modules. Which again, you look at obviously Crowdstrike, what all includes. Workday from their HR cloud platform, ServiceNow is their service management cloud, and Salesforce. Lovely stuff. Crowdstrike's the new big deal, baby. Crowdstrike is the new big deal. And obviously this is focused on cybersecurity, as you know it. They're powered by cloud-scaled AI. You love it. Very, very tech-based company, no doubt. So the main obviously focus of this company. They detect any cybersecurity threats, and naturally that's how they learn to, the AI itself determines what is necessarily a threat. Pretty nice stuff. So their distribution threat graph, it says they've seen over 3 trillion events captured per week as far as cybersecurity is concerned. So pretty exciting. And they're stopping all these breaches, okay? It's all AI powered too. So this system knows what to detect as far as a breach is concerned and knows how to shut it down. That's what's pretty cool about this, for sure. So everything from Crowdstrike store, threat intelligence. They're searching malware. They're searching, firewall management, device control, next gen. They're hunting for threats. They do it all. They do it all. So, again, as you mentioned there, over 3 trillion events streamed to the threat graph per week. So they're locating everything and shutting it down. Pretty awesome. And obviously based off cloud, which is what they are, they're mentioning why this is better for preventing any sort of incidents. And it's obviously ease of access of data. It's constantly protected. The AI system is continuously learning by analyzing data in previous historical events, so they can find that out, and they reuse data collected one time and can reuse it as much as they want. Customers, we saw massive growth here. 49 of the Fortune 100 companies are using Crowdstrike, 11 of the top 10 banks are, and 40 of the top global 100 companies are using it. Pretty massive. So they have a proven enterprise sales model, as they say. Direct sales plus channel partners. You got sales in the field. They're selling globally. They got it all. Nothing crazy as far as this slide's concerned. Nothing super exciting. And obviously they have videos as far as people talking about different companies, talking about how they use Crowdstrike. Even Pokemon's on there. We're not clicking on it. We're not clicking on it, okay? So overall, total addressable market by 2022, they're expecting $31.9 potentially $1 billion in total addressable market. That's an increase of 9% year over year, or annualized growth rate of 9%, I should say. So pretty exciting as far as that total addressable market's concerned. So all their platforms, that's what they're expecting to grow. And as far as just devices in general that they'd be using this platform on, they're expecting a 10% annualized growth rate to 2022, to where as far as billions of devices, 28.5 billion potentially devices using Crowdstrike's internet security platform, which is again massive. That's where that total addressable market increases. Annualized recurring revenue, you see it's growing honestly exponentially as opposed to just a relatively flat. It's growing exponentially. And then net new average recurring revenue is what's massive too. That's what they set a record on. And that's what you want to see higher growth on all the time. Obviously strong revenue growth, as we mentioned, both security or subscriptions for the most part, no doubt. Nothing too crazy there. Percent of subscription customers with 4 or more, you see that number's rising quite a bit. This quarter, 57%. Last quarter, or last year's quarter, you saw around 50%. Quarter before that, or the year before that, 41%. So the growth's there. And they're actually with 5 or more cloud module subscriptions. There's 39%. It's good growth stuff there. It's just really good growth stuff. And as far as gross margins, you see that rising as well. They've been rising pretty steadily. They're leveling out now, obviously, but still good margins for this company and improved operating leverage, as they're mentioning. As far as profitability, they're planning on it this year you'll see non-GAAP profitability. GAAP profitability probably going to be a couple of years still down the road. So long term, they're expecting subscription growth around 75 to 80%. Love it. Operating margin even growing 20% there. I don't know if this bad boy gives me the balance sheet, but if it doesn't, which it doesn't. Come on now. We're going to go right to the press release and go down to that balance sheet and take a look at how beautiful this company is and what they can offer. So, let us find this bad boy. Oh yeah. This is a 6 months comparison, so nothing crazy here. Cash and cash equivalents. Right now, this balance sheet's flooded with cash, okay? Marketable securities went straight into the cash position. They cashed in on these securities, so that's why that cash is so heavy. From a total current assets perspective, there is a difference for sure, 1.3 billion versus 1.17 billion. So you saw a growth there of around 130 million. Good to see that. Total assets in general of 1.6 billion versus 1.4 billion. Good $200 million growth there as well. Nice to see that. So we like to see liabilities too. Total current liabilities did increase by a decent chunk, 603 million versus 493 million, around 110 million dollar increase there. And total liabilities in general increased quite a bit as well, 824 versus 6 months ago, 662. So we do like to look obviously at stockholder equity. Stockholder equity did rise by around 50 million. So the balance sheet is growing. So you got to take that for what it is. So 792 million in stockholder equity versus 742 million previously. So the balance sheet's good on this company, and it is growing. But again, valuation's my concern. I like how fast they're growing, and that's why it has gotten this valuation so high. But as far as initiating a position, I don't think it'd be worth it really at these levels right now. I'm sure if you're thinking very, very long term, 5 years down the road potentially, it'll be fine. But I don't like the valuation currently as far as starting a position. So that's all I got for you today, and I hope you enjoyed.